Well, hello, everyone, and welcome to the Benjamin Z. Miller Investor Networking Group. Nice to see the different investors that are here from around the world, and I'm looking forward to going through an exciting presentation today on the topic of insurance for investors. If you're an investor, it is so important to make good decisions when you are buying insurance, and we'll talk about some things that are important factors. I want to talk about the history of multifamily insurance in the United States. It began in the early 20th century, and it initially was insurance companies that were offering basic property and simple coverage for multifamily properties. But over the years, it has really developed into quite the industry. There's some common terms that a person should be familiar with. Of course, liability insurance. This is important to have a handle on this. It just basically covers injury, damage, and legal expenses potentially. There's also another type of insurance that's important for investors, and that is loss of rent coverage. And this type of coverage actually protects against income loss due to covered events like fire, natural disasters, or tenant defaults. So if you have a multifamily property, it can be a good idea to think about a loss of rent coverage. The deductible is the amount that when a claim is filed, you have to pay. And then there's a couple distinctions: replacement cost value and actual cash value. So we'll talk about all of that. Business interruption. Here's an example where there's a fire. Say there's a property that you own and there's a fire, and it affects the building where it's going to take all sorts of repairs, and it may be a while. But if the property owner is unable to generate rental income during that time period, if you have business interruption insurance, that can cover you. Another type of insurance that's important is the umbrella insurance. Imagine that you have a multifamily property or just a rental property, and your tenant slips and falls, and sometimes they decide to file a lawsuit. And in that case, if you have primary liability insurance, it may give you coverage for incidents like this. This is something that's very important to have. One thing that's a little more relevant also is the choice of replacement cost insurance versus actual cost value, actual cash value. So that should say cash, not cost, actual cash value. So replacement cost it's exactly what it sounds like. It's the cost to actually replace. If we have this multifamily property and the roof is damaged and it takes $50,000 to replace the roof, a replacement cost policy would pay $50,000. But if you had an actual cash value policy, they would take into account the lifespan of the roof. If the roof was already on the building for 10 years and there was a 20-year lifespan of the roof, they would consider the depreciation to be 50%. So if the total replacement cost is $50,000, the insurance company would provide coverage for the lesser of the $25,000, the 50% on that. So you're only going to get $25,000. Now, the nice thing about actual cash value is it's cheaper than replacement cost. So you've got a choice there of what do you want. If you want the better, in this case, the replacement cost, it costs more. But if you do an actual cash value, it can be a bit less expensive. But it doesn't always work out that way how they pay out. And I've got an interesting example here. Imagine that you have a multifamily property and there's a water burst where there's a pipe that bursts and water damages the hardwood floors. Let's say that the hardwood floors were installed 15 years ago. In this example, if you look at a replacement cost value, they are going to cover the cost of replacing the hardwood floors with new ones of similar kind and quality. Let's assume that the total cost to replace the flooring is $10,000, and the insurance company assumes that the floors would have a 20-year lifespan. They could, if the floors are already 15 years old, they would tack in a depreciation rate of 75%, and you would get a check of $2,500. Whereas if it was an actual cash value policy, the flooring again is 15 years old. The insurance company would reimburse based on the current value. And in that case, if the current value of the flooring is estimated at $3,000, you would receive a reimbursement of $3,000. So the actual cash value that you would get is higher in this example. So it depends on the particular situation. Most insurance policies come with exclusions. Common exclusions are earthquake or flood. They will say, well, if there's an earthquake or a flood, we're not going to pay. And this is something that's important. Wear and tear or maintenance exclusion. So just if something is getting older, that's not going to be a sufficient reason for a claim. That's considered wear and tear. They also will exclude intentional acts. So if you have a tenant or that gets angry about something and they decide to attack your property, a lot of times they will treat that as intentional acts and they will exclude coverage. So here is an example of a tenant that left some cement in toilets. This was actually in Tampa in the United States. It was before a foreclosure. And that's an example of such a thing. This I called him a tenant, but actually it was somebody that owned the property and they got into a foreclosure situation, and out of anger they did this. Now, what if you get an offer to settle? Say you file a claim and they come back and they offer you a certain amount. One of the greatest mistakes that most new investors make is they are very quick to take that insurance money. And that is a huge mistake, because you need to make sure that you're getting the full value of your claim. And the insurance company very often will make a first offer of what they consider a reasonable payout on your claim. And if you are like the majority of people and you just accept that, you may have left a lot of money on the table. However, if you don't have a lot of time to work on it, you can also use what's called a public adjuster. And a public adjuster, you can contact them and ask them to contact the insurance company and to work out a higher payment if they're able to. So that's a mistake that many new investors make, is they just take the first insurance money when they might be able to reasonably qualify for more if the insurance company has made a mistake or the insurance company hasn't paid enough or offered enough. And that's not an uncommon situation. So another thing that new investors often make a mistake with is if they are dealing with a roofing company, as an example, and it doesn't have to be a roofing company, it's any sort of a contractor where they're going to pay the contractor to do some sort of work on a property. It's extremely important that you get a certificate of insurance from your contractor before you let them work on the property. And it's also important that once you get a copy of that certificate of insurance, that you contact the company and confirm that the policy is still in force and that it hasn't been canceled for non-payments. Because sometimes contractors, when they get tight on cash, they will have things that get canceled for non-payment. So it's important to contact and confirm that the policy is still in force. You want them to email it to you. That way you have it in your email, and it's easier compared to if they give you a piece of paper and you have to take a picture of it and then scan it. It's just easier to ask them to email you a certificate of insurance. And then if you check on it and the insurance is good and it's in force, you can go ahead and give them the job if they're the contractor that you've decided to hire. But what if you get a bad apple? And there are sometimes some bad apples out there. Not every contractor is good. There are a few bad apples. And if you get a bad apple that does a bad job, and then when you ask him to fix the job, he just quits returning your phone calls, if he won't refund your money, what can you do about that? Well, you can file potentially a claim on their insurance policy. So you can do this with your lawyer. You can have your lawyer do it. If you don't want to do it yourself, you can just give your lawyer a copy of their liability policy and ask your lawyer to file a claim on your behalf. You will present documentation of all the things that they did that were wrong, and your lawyer can take care of it, or you can do it yourself if you want to. But that's an important thing that many an investor makes a mistake of not making sure that the contractors they're working with, that they get a copy of the certificate of insurance, because a lot of times the contractor, when he's done with a job and he drives off, that is the last you will ever see of him, no matter what happens. So you just have to be aware of that. And that extra bit of time getting that certificate of insurance is so, so important. Another thing that's critical is, let's say you're buying a property, and a thing that often many new investors and even experienced investors make a mistake with is they do not remember at the closing to get an assignment of insurance proceeds when buying. So they're going to buy a property, they go to the closing, they sign the paperwork as the buyer, the seller signs the paperwork as the seller, but there's one important document, the assignment of insurance proceeds, that is a non-standard document. Most lawyers and most title companies don't normally see that one, but it's an important one that you have in your document set, so that if you purchase the property and it turns out that the seller, who had a valid insurance policy during the time period they own the property, let's imagine that there was a hailstorm and the roof was damaged, but for whatever reason the seller was not aware of the damage and did not file the claim. Well, if you don't have an assignment of insurance proceeds, you can't open that claim. You can't have your lawyer open that claim. But if you do have the assignment of insurance proceeds, you can actually open the claim on the seller's old insurance policy and potentially get the payment if everything goes well. But that is something that most investors are not aware of, and most investors never remember that. And it's just something that's important when you buy a property, to try to also get an assignment of insurance proceeds. Because if you discover something after you buy the property that could have been a valid claim that for whatever reason the seller didn't sign for, you are not in a position where you can file a claim on the seller's old policy as the new owner. However, if the seller assigned the insurance proceeds to you, then you are in a position to do exactly that. So that is something that is important, and it's good information. Couple of reminders for the group. Please, in the chat window, check the sign-in sheet. I think everybody here already has signed in, but it's a good idea to check it, see if there's anything you want to update there. And if you have any friends or colleagues that you think would benefit or be interested in this Sunday meeting, feel free to invite them. Come one, come all to the Benjamin Z. Miller Investor Networking Group. And more exciting news, we now have a new Discord link. And this is an area online, it's free, where you can go and you can meet other investors from around the world in the group. You can discuss deals, you can talk about deals there, and there's a lot of resources, and we're adding in more and more resources every week. So that is it for the presentation. I'm going to go ahead and stop the recording, and then I'll take any questions that anyone may have.